when it comes to the IRS and tax havens that we have more of a consumption tax, which means the more you're not putting money back out there, the more you're going to be taxed. So it's like, okay, you have to really keep the money flowing to the economy, which is what the government really wants.
Welcome to The Path to Wealth, the show about well-being, fulfillment, and financial freedom. And I'm your host, Hennche. Welcome to a new episode of The Path to Wealth. I'm your host, Hennche. Today we will talk about tax strategies for beginners and adding value to others to build solid teams. I'm excited to have a great conversation with Larry Pendleton, a seasoned CPA and tax and investment consultant, and the senior partner of PC Financial Services. Larry provides tax consulting and comprehensive tax preparation for over 200 investors nationwide. As a dynamic real estate investor since 2016, he has also engaged in various ventures overseeing a portfolio of 13 cash-flowing properties and land for development. Collaborating with passive investors, Larry ensures above-average returns secured by real estate. Beyond his professional endeavors, he treasures family life as a devoted husband and proud father. Thank you for joining us today, Larry.
Thank you for having me, Hannes. Looking forward to our discussion.
Of course. So where did your money mindset originally stem from? Is that something that came naturally in your family, or is it something that developed over time?
I would say develop over time, and to be completely honest, I'll probably say within the past, I'm 39 now, but I'll say the shift really has been over this past decade. A traditional kind of household. My dad worked a lot of hours, even started his own business, but he was really more so he just turned his business to another job for him. But like I said, I'm definitely grateful for what he's done, what he's provided. But that aspect of, I know it's kind of cliche now, of going to school, get a job, and pay taxes. That was kind of what I was brought up in as well. But not until I actually started getting to more in the public accounting space and working with more high net worth individuals, and I started to see, okay, the taxes for someone who has a six-figure W-2 job is completely different from someone who makes six figures from real estate, and they don't have to worry about getting fired from their investment. So it really kind of started there, and then still connecting myself with the right people to even determine if I am an investor myself. And fortunately, with my business partner kind of gave me the little kick in the pants to kind of see things differently from that perspective. Is okay, you got the knowledge, you know the numbers, you just having to put the right team together. So this past decade has been just putting myself around and adding value to those that I can learn from, and constantly evolving so that I can pass it down to my children going forward.
So what would you say were some of the wake-up points along the way where you were like, oh, maybe I'm on the wrong side of this equation? You know, maybe I too can be an investor. And where did you wake up to what it means to be an investor?
I would say it was around 2015 before acquiring like my first property, I should say. And like I said, my partner he had a lot of stuff going on his plate. He kind of put one property on my plate to close on, and end up doing that by 2016. But you hear about books like Robert Kiyosaki, Rich Dad, Poor Dad, and all these other entrepreneurs and investors. So roughly it was around that point of 2015, I started to kind of see, okay, you hear about the corporate ladder, and there's a aspect of the whole ladder of life. It was okay, the thing is like my ladder. I think a lot of people's ladders are kind of up against the wrong building, because you start to look around and see, okay, those that are making it, they're not hopping from job to job. They're not complaining about their bosses. They're not overly worked from that perspective. And they're just trying to find what their value is, and they're trying to provide that to people. And I thought I was doing that in my W-2, but it was like more so just for the employer I wasn't really like helping like many other people outside of just the clients that we have. So that aspect of, okay, I can provide housing for folks. I can help educate people on financial literacy. I can do all these different things that doesn't really tie into just one W-2 aspect of it there. And that's where the shift started to happen for me.
And I think those is also, that's where a lot of fulfillment comes in life. Like when you're able to share what you've learned, when you're able to provide something for somebody who needs it. Those are all very fulfilling dimensions of a life.
Exactly. So I think we all have a mission, like in life, and a purpose. I believe part of that purpose is to serve others. I may just be kind of speaking out of turn for me, folks. So I just kind of just bring it back to myself. It was that's my value that I can add to the world. It's like that. Okay, I can help educate others on investment as well as provide housing. From that standpoint, and continue to grow from there was like, hey, it's bigger than me because I can't house all the homeless. I can't help educate everybody, but I can connect with those and spread the message out of being an investor and growing and building from here.
Yeah, I can relate to that. Like initially, also, for example, when I started communicating over podcasts and going out there, I always it's so easy to get overwhelmed if you compare yourself to somebody who maybe has a podcast with 1 million or more downloads. And then like, I can't reach everybody, but I can reach one individual or two individuals. And now I think about it as like how cool it is to think about how many people have downloaded it and what kind of room that would fill, you know, and that's in itself, like if I just keep in mind that I can help a single individual, I already think it's worthwhile and fulfilling. But then the reality is you will, once it compounds and your experience compounds, you can reach so many more people.
No, I appreciate you sharing that. I think a lot of people, I mean, including myself, like we struggle with that. You see this person over here is okay. Well, I'm comparing. I'm at step A, and they're at step S. So they're light years away. That doesn't mean I can't learn from them, but I don't need to compare where I am now, which ends up being the downfall for a lot of people is just the constant comparison. It was like, hey, I'm not comparing where I am now. I'm like kind of compared to where they were when I was. Like it's still different depending on the time they started, the market, everything. It's like, well, I can appreciate the steps along the way, enjoy the journey, and then just take gratitude of the progress that's made instead of looking at someone else who's light years ahead of me and then feeling bad about myself. I think Dan Sullivan has a book, The Gap in the Game, that talks about that exact same thing.
Yeah, I've read it and I really enjoy it because it's like whenever you focus on the gap, it's so true. Like in life, the life we live, like I was just talking to my aunt, for example, yesterday, and we're talking about artificial intelligence, and I'm really feeling that we're on the cusp of what I would consider sci-fi maybe 15, 20 years ago. You know, we're now at an age where technology has evolved to what my parents' generation would consider sci-fi, you know, and then I'm like, you can look at it through what we have today, and you have, for example, Gmail didn't exist 20 years ago, iPhones didn't exist 20 years ago, Twitter or X didn't exist 20 years ago. There's so many services that are like completely normal to us right now, which haven't even been there 20 years ago, which in me now evokes a lot of gratitude. I'm like, oh my God, it's just amazing. Like I can fly from one continent to another within a single flight. There is no hustle in that. I can use all of that technology. Now we're on the cusp of artificial intelligence. But at the same time, I could choose to look at, oh, you know, my phone can still not do this, and my software can still not do that, and the airplane still takes 16 hours to fly from here to there, you know, and it's not supersonic yet. And there's always a place to be in the gap.
Exactly. Yeah, definitely good points there.
But I'm truly waiting for those supersonic planes.
That was it the Star Trek teleport?
Oh well, you're taking it to a different level. Man. I'm just hoping to get from London to New York in 4 hours. You know.
Well, we'll get there at some point.
You want to get there in an instant.
Exactly. Oh man.
So what brought this into your mind, like that it's important also not only on achieving, but what to focus on during the journey that actually makes a fulfilling life altogether.
It's I mean, we all do things in life that we do not enjoy. Like I don't like cutting the grass. Like I say, I'll do it if I need to, but it's not one of the things I really enjoy doing. So, but there's so many major things that we're doing. Is okay if this is becoming a drag on me, then that's going to affect my relationship with my spouse. It's going to affect the relationship with my kids. If I'm feel like I'm draining myself day after day doing something, especially something that's actually bringing in income, because that's what we tend to put our focus into the most of our time in the day. So that aspect of if I can enjoy doing this, then there's something that I'm not doing correct with it, or is it not something that I should be doing? Because it leads to procrastination, which just basically means there's nothing wrong with it. It's just like there's something has to shift. Like people, for another example, like people see that I'm a CPA and assume that I do bookkeeping. I don't do bookkeeping. Like I do, do tax investment consultations. I prepare taxes, but I don't like bookkeeping. Like I have a bookkeeper. I have hired another accountant to do the bookkeeping. That's just something that's like, hey, I can continue to drag and do this, and it's going to bring me down and affect the business, or I can find someone who actually enjoys doing it. That is actually a strong suit of theirs. I know what to look for. We met right before this before this call, but that just gets that one thing off my plate so I can focus on what I'm great at, and enjoy that aspect of my business and my life. Plus, I get to enjoy to see her build her business and build her brand and sharpen her tools. So it's like great. So it's fulfilling for me to actually provide. It's always not about this. The money is okay. This person's actually fulfilling something that they enjoy doing. So it's like great. Like this is a win-win for everybody.
You know, the funny thing about bookkeeping is I also like to give it to someone, but I find it very hard that somebody actually enjoys it deeply. Like hard to believe. I mean,
People say the
you
same thing
enjoy the
about
process.
taxes. I enjoy the aspect of going through someone's tax return, and I can literally paint a story of how your year went based off of that 1 year's tax return. Am I a big psychotic for enjoying that? Probably, but it's just you find it, you hold on to it, and you go and you expand from there.
What was the process of finding it for you? Was it something that was obvious to you that you enjoy this? Or this is something that maybe even puts you in a state of flow? Or is it something that you explored different things and eventually it became obvious that this is something that you would really like to pursue?
Mm. It's it's a combination of it wasn't automatic. It didn't come easy to me. Um, a lot of self-reflection, just a lot of different self-help books, and not just business development, but just like just soul searching from that aspect. And then that aspect of deep work, because you can get into deep work of almost anything, but then it's like, how do you feel afterwards? Like, do you feel drained even though you accomplish something? Or kind of back to our conversation earlier about the gap in the gains, okay, are you focused on the gap of when you started to when you finish, and you're just like how much time that went by, or you just like, man, we got this done, great. So I started to kind of focus more on, okay, how am I feeling after completing this? Like I will get into deep work, and then sometimes when you're, even if your phone is off, like that whole deep work, you still distract yourself out of it, because you'll start focusing on other things beyond what you're working on. So that's how I kind of came about it. Just figuring out from that aspect of it, just kind of gauging how I feel, almost like when you eat something. Like, how did you feel eating that? Like, did it actually provide nourishment to you, or are you just kind of drained because you overate, and you're feeling sluggish and not too good about yourself? So for that, guilty of that
Yeah,
as
I've been
well.
there.
But but that's how I kind of able to kind of dig deep into myself, and figure out, like, what are those things that I feel that I can great at, that I enjoy doing, that can actually be of value to others.
Yeah. I like the words you used, deep works, soul searching. And earlier you also mentioned mission. If you were to maybe state your mission in a single sentence, what would that be like?
My mission is to help people achieve financial freedom through real estate investing and tax strategies. That's something that I think that's the past 3 years of me just kind of determining that now it's starting to shift away of just real estate investing and then just it's probably just be just investing going forward because I've for me personally, I think people, once they get the money thing figured out, they can actually spend more time in what they enjoy doing, and investing can actually help that for a lot of people. Okay, you've got the cash flow coming in, you got your bills paid, kids taken care of, families and all of that, whereas, okay, cool, you can spend more time with family, or you can donate more to your religious organization or whatever charity that you want to support from that standpoint. I think people, once they can get out of the daily grind, and it's not simple at all. Like I definitely don't. I want make this clear. It's not simple getting out of that W-2 world or that aspect of you don't have a choice but to have a W-2, and in some cases multiple W-2s. But if I can help people achieve that financial goal that they're looking for, okay, if I can make this much, I got that covered. I can then choose whether or not. My wife is a prime example. My wife still works, and I know exactly how much the business and the investments need to be making in order for her to have the choice of going back to her job every day or doing something else. And she loves being a dance teacher. So if I can help her open up more time to teach dance, that would mean the world for her. And that would mean the world to me. Now, happy wife, happy life aspect. but that's just kind of just an example of kind of why that's my mission.
So for somebody who's maybe crossing the six figures, mid six figures as a wealth and tax strategist, where would you start guiding them to maybe get more tax efficient, but also keeping in mind that if you help them stack or compound their investments over the next decade or two, that they can truly be free from their job and maybe spend a lot more of their time being that dance teacher, like Whitney, or just fulfilling their own vision.
Yeah, and it's always the aspect of, what's the goal for the individual? Like, what do they feel comfortable doing? How are they making that six figures, and what is their whole family dynamic? And as I tell most people, like, whoever your tax advisor is, could be me, it could be ever, like, they need to be asking those deep diving questions, because anyone can just come out here and start shooting out tax strategies. But if it's not something that you're willing to do and really see through, then the tax benefit is only for 1 year. Then it's like, okay, you have to keep doing it over and over again to really see the benefit of it. So I always tell people, like, hey, what type of retirement accounts are you investing into? And like, there's certain ones that it could be best for real estate investors, or you just need a separate account. So to put some tax shelters away, capital away, to shelter away from taxes from that perspective there. So like, we talk about retirement accounts, we talk about entity structure. If you're running this business, okay, how well is the business going? Okay, it may be time to start making different elections so you're taxed differently at that point. That may save you some taxes there. Health savings accounts, how are you funding and paying for insurance, and how does that play a factor into tax savings as well? And then we get into the big stuff of, okay, what type of real estate you're going to be getting into, and understanding of how income is taxed, and why that rental income is taxed differently than that paycheck, even though it may be the same amount. Okay, once we break down and explain to people how the IRS tax certain income, then you start to kind of shift differently, where you're trying to get your primary income into an environment where it's not as taxed as harshly as a W-2, or even just being self-employed as well. Like, once you start to kind of make those more shifts, like, the taxes start to dwindle down once you make that transition. So even for people, but the aspect of owning real estate, okay, great, there's tax benefits, but a prime example is the whole short-term rentals. Like, a lot of people just kind of got into the short-term rental loophole because you don't have to be a real estate professional. But do you know what it takes to run a short-term rental? Like, we have 6 of them, and you're getting texts and calls throughout all day and night, no matter what time it is, because something's happened at that property. Now, are you equipped to do that as well as track your time and all that stuff as well? And like, and I don't say it to discourage people. It's just you just can't just put money somewhere and then think it's going to ride out. It's like eventually the tax bill comes due. Is like, do you really want to put the work and effort in to these things in order to get this benefit? And if you do, great. I got a whole list of strategies. So it's like that aspect of start looking into different type of appreciating assets, not just real estate. People get into oil and gas for or self storage, those type of investments as well. I know people like to get into like buying cars and all that for their business, and that's there. But this that's as an option to take into consideration if you're just looking for a quick year-end write-off and you want to buy a 6,000 pound F-150 or whatever for your business and get a deduction. Like, yes, there's possibilities to getting huge deductions that way. So that's the path that we try to take people down. It's like, here's your different options and opportunities. But the main thing that when it comes to the IRS and tax savings is that we have more of a consumption tax, which means the more you're not putting money back out there, the more you're going to be taxed. So it's like, okay, you have to really keep the money flowing to the economy, which is what the government really wants. Creating jobs for people, housing, food, water. Like if your goal to save on taxes and you're focused on those areas, jobs, homes, food, water, energy, then those are opportunities where you can get tax savings that the government really is trying to entice people to go into.
So the government basically provides a rule book to play by that allows you to save taxes because they want to see certain change in the country.
Yeah, exactly. They do not want to provide housing. Like they really want the private sector to be doing stuff like that. So, and we see all the time, like I know people joke around about like having kids and getting a tax deduction because they're trying to help populate the workforce. There's always a particular end goal. They want to encourage people to buy homes. They offer a mortgage interest deduction for your personal home. Same thing with charity. You get deduction for charity. Like they have certain rules. Now the incentives become greater once you become an investor, a business owner. And we talk about research and development credit, tax credits. And even with everything with COVID that happened a few years ago and the PPP loans, like people start to see like the government wants businesses and investors to thrive because those are the ones that are providing jobs. Government wants the private sector to provide jobs, provide housing, and so forth and so forth for the masses. Because that's just less responsibility that they have to, so they can just kind of focus on just governing the country, not providing additional services.
Yeah. And that again kind of goes back to mindset. This is something that you and me also had to pick up over the years and learn that, as an employee, we take little, or not always, we could be a very high level employee, but generally speaking, employees have less responsibility, but we're kind of being taxed higher. And people that own large companies, especially, they're taking a lot of risk, but they're also providing jobs. They might be providing services. They might be providing houses or housing. And therefore, their taxation is differently kind of incentivized to take those risks in order to provide housing.
Exactly. And like I said, it doesn't really matter. I mean, obviously, the richer you are, the higher paying W-2 you are, is more like it's saying it's worse than it is, because you're just at a higher tax bracket and you don't have as many write-offs. You're somewhat phased out of different deductions and whatnot going forward. So it's like once you kind of see, and it's tough for a lot of people because especially if you're making six figures, and especially those that are making $250,000 up in a year, is okay, how do you step away from that type of W-2? But if you're constantly or just getting hit with taxes, like that mental shift and how you're going to get out of it has to take place. If you feel like 30, 40, 50% of your income is constantly being taxed on an annual basis.
Yeah. Imagine that compounding curve.
Exactly.
How that wealth is being taxed away from you.
Yep. So that's a tough part. It's like, hey, great, like you already have half your money being taxed away. How much of that other half can you really pay for bills, and how much can you really put aside from it? And it's also, and I know before we started recording, the aspect that you can't do this alone either. And that's where partnerships and the whole other people's money and all that stuff kind of comes into play there, because so much of your own income is taxed. You may not have, it's going to take you longer to kind of put that money aside in order to build something by yourself. Where it's like, okay, great. Like if you're willing to share the wealth, and or share the harvest itself, then bringing people on becomes a benefit because it gets your foot in the door. It gets you actually started instead of constantly just worrying about putting money aside. Emergency come up, is okay. You may have to dip into your savings. It's okay. Spread the risk, spread the potential upside as well, and get in the game.
Yeah. So how did you go about becoming a partner or building teams? How did you manage to identify people that you could rely on, trust?
There's always an aspect of going off referrals and then just kind of checking to see what people actually have done. So it's like I always find it fun. People ask me like, can I send them referrals of other clients? And it was like, well, I don't want to just put people's names out there. And I'm obviously only going to pick the people that I know would give me a good review. So it's like, I never understood, but it's like, hey, you can do your own research and kind of poke and prod and find people. And this also because I tried to do flips as well, and I failed miserably at flips because I did not take that time to kind of vet the right people working on the job. I just try to cheaply do it, and people say the right things. It was okay. Now taking that time now to really kind of assess who's going to be doing the work. Like one of my main partners is a Class A contractor, so I vet everything that he does. Like I don't really have to kind of check behind him, because we got that trust in one another. Even from the aspect of who I bring on the accounting side, as well. And I tell all people that work for me, like, or one of my first interview questions is like, do you like puzzles? Because if you don't, or you hesitate, like you really not going to really enjoy this aspect of, at least to me, like the aspect of accounting, taxes, whatever. Is like it's all just a puzzle. It's just what type
Yeah.
of puzzles are you really into, and do you like kind of piecing together what someone has kind of given to you in a shoebox from there.
Yeah, that's a very funny way to look at it. And it's kind of how it literally is. You know, you have all of that information in a box, and you're kind of throwing it on a clean table, and then you're putting it together in a way that you get the picture, the full picture out of it.
Yeah. So like I say, there's always everyone has their own methods of vetting people. Like that just seems to have worked for me, as well as just constant relationships, constantly chatting and whatnot, and just building that rapport with folks going forward. So you try to make sure you keep those conversations going as well, and just make sure they're on the same accord as you are.
Yeah. So when it comes to tax strategy, one of the very successful ones for us in the last couple of years has been bonus depreciation, which is kind of phasing out now. Where are we looking at once bonus depreciation is actually phased out? Where do we see other tax benefits that have a similar magnitude?
Yeah, so there will still be that benefit within real estate itself because depreciation is still going to be a thing. And that's where cost segs will still be a factor, even though it's not going to be the bonus. But you still have accelerated depreciation of taking properties at 27 years and being able to depreciate them over five or 15 years. So there's still the aspect. Depreciation is still beneficial. It's just not going to have that crucial impact that people are looking for. For those that are running businesses like business that generate active income separate from just rental real estate, solo 401ks is always going to be something to take into consideration because you're not limited to just the $6,000 limitation as just regular traditional retirement accounts that will allow. So depending on how much you're making, how much you're paying yourself, making that additional contribution up to $66,000, I think for 2023 it becomes rather beneficial for those there. Even the aspect of if you're making over a certain amount net wise, do you do the S corp election and get your business out off of your Schedule C? It's a separate tax filing for it, but that can help to save on your self-employment / FICA taxes there. So there's that aspect of it there, and then just how to kind of plan out the year. Was okay, do you want to prepay for any type of equipment or taxes or insurance, like being able to prepay for things and get deduction now, even though it's going to be moving forward. And then I know people started to talk more about donor advised funds, but it's really more so as just large contributions that can actually get you over the standard deduction, which is rather difficult with the increase in standard deduction back in 2017. But in order to being able to contribute assets that you may not be getting much depreciation off of anymore, or may not be cash flowing, okay, you just depreciate the house, whatever, at that value, they obviously give you a huge opportunity to get some huge write-off that way as well. So it's like a few different options there to kind of give you some of those larger slashes in taxes so that you can start to kind of offset that tax liability.
The last one you mentioned, I've never heard of. Was it a large donation?
Yeah, so yeah,
or
but the whole aspect of, well, as I say, it's a large donation, and if you want, you can then donate property and whatnot. I know people get into
okay.
that is donor advised funds, but like there's not really putting into a non for profit. It's just really putting into a fund that you can potentially then allocate
okay,
where the donations will go to at different dates. But the main thing is you got the appreciating asset in there. You get that huge deduction in year one, but then it doesn't go straight to whatever non for profit. You may not want to give that much to just one non for profit and kind of allocate out throughout the years. But you accomplish the goal now of just getting the huge deduction up front.
I see. Okay. That's interesting. So you basically, and that has to be for charity. That cannot be for like a trust fund, right?
Yeah, it has to be for charity. Like the end goal would be for charity, and then there's timelines and stuff that funds have to be allocated out out of this fund. But like I say, yeah, it's not just a regular like real estate fund. Like not like that you're putting the asset into.
I see. What is a smart way to prepare for regular inheritance? Again, normal family. We're not talking about super wealthy people.
Mm-hmm.
But is there a way to prepare for that smartly, or what are the kind of the limits in the US around that? Is there gifts you can make maybe a decade or two ahead that will change the circumstances when it comes to the actual inheritance and the taxation of that?
Yeah, so it all depends on what is being inherited. So for the sense of like, hey, you're just getting inherited cash, then like that's not taxable from that standpoint. But if you inherited like properties or stocks, stuff like that, you do have to be somewhat cognizant of when you sell those items, because there will be the gains because you'll end up inherited at whatever basis that it is, and then if you sell it for more than what that actual value is upon hearing, then you gotta pay tax on that. So it all kind of depends on where you see the asset kind of growing or falling at this point. And then you did have the estate planning aspect of it as well, over like with gift tax, unless you're exceeding the 16,000 a year, like gift tax, like you're just kind of just monitoring that. But unless you're receiving like the $12.2 million over in valuation in gifts, then there's no taxes to really worry about there. But so it just kind of monitor, okay, what is being inherited, and then if there's anything outside of just cash, just something that could be resold, okay, like what's the plan on reselling that, because you may be subjecting yourself to additional taxes just for holding it longer than need be, or just selling for much larger than what the valuation is. So getting appraisers in place and evaluators in place to get those numbers locked in could then help kind of determine, okay, what's the next moves after that.
Yeah. You mentioned 12.5 million. Is that for any relationship, or is it just for family relationship?
Mostly family when it comes to gifts, stuff like that. So you're just constantly like gifting that amount. So you're just mostly with families.
Okay. So if I cannot give one of my friends, I don't know, $10 million over the course of my life.
Yeah. So I mean, that would be a very unique situation there that will possibly have to be carved out and discussed. but yeah, so it typically is for family, but like for large like payments like that on an ongoing basis to non-family members, then could be somewhat seen like what this was a business transaction from that standpoint. So it could be, but like I say, it all has to be kind of assessed as it comes
Ah,
along.
like that. I see. Yeah. A- And another question, maybe you have insights on that. Maybe that's more actually a question for somebody who's working in banking. But to what extent does the government or the IRS actually have insight into our accounts? Like what are the red flags, movements, and just I'm just generally curious because I know sometimes I'm moving money internationally and it gets frozen in the process, and I'm aware of
Mm,
that because there's like the German bank, it's like, hey, we had this movement. You have to declare where the money is coming from. Then I have to proof of funds from overseas, and kind of I understand where this is coming from.
mm.
But I'm just wondering what are kind of the insights that the IRS has into our actual accounts if they want to.
Yeah, so I mean, when it comes to freezing accounts because of back taxes, like the IRS can start going to garnishments if they feel need be to dig into your accounts. The government is monitoring that on an ongoing basis. It's I used to audit banks. I think it's like BSA, like Bank Security or Secrecy Act, something like that. I may be getting the S the S wrong, but there's a certain dollar threshold that's constantly changing. Okay, if it's over this amount of a deposit comes in or something that's being paid out over this amount, like it gets flagged, and more so for like they just the claims are that they're kind of checking to make sure like there's any like money laundering or any of the fraudulent activity type of activity um, happening with large transactions happening like that in and out of banks from there. So that's like I said, the next banker that you have on will probably go into more detail on that. But like the government is kind
Yeah,
of monitoring that with the banks because they are required to report that type of activity to the government frequently.
yeah. It's just clever. They weren't freezing my money for back taxes. It was just because when you move larger amounts of money internationally, they just want to make sure that before the bank releases
Yep.
it again, that they know where the money came from and that it's legal and it's not money laundering.
Yeah, yeah. I think depending on the country, then it'll take longer. But yeah, like even beyond like the back taxes, like just making huge wire transactions from different countries or even within the states could trigger that freeze, and basically it's just being flagged and they're doing their additional due diligence on what the transaction is.
Yeah. Well, in I think globally they're trying to get really a lot better hand on the money. Like I think
Mm,
governments are taking out large bills. I've seen that in Europe, the 500 euro bill is gone. I've seen that in India, the 2000
mm,
rupee bill, which by Western standards isn't even that valuable. They're taking it out, and the government is trying to push money digital because they love the transparency in it and they love that they can just take a look at the books, and see where it's moving and where it's coming from and kind of understand the flow of the dollar or the rupee or the euro, and they I think they love that they can get their hands on digital money easier than they could have ever had on cash.
yeah, and they've been monitoring for a few years because I'm not sure many people notice like there is like a checkbox on people's tax returns, and the question is like, have you purchased or sold anything via digital currency or had any digital currency transactions? I'm just kind of paraphrasing the wording. So it's really just a
Yeah.
yes or no. Like, and they just like I said, they haven't really said or like what amounts or anything like that. They're just tracking this. They're really more just tracking to see how many people are kind of clicking that yes box to kind of gauge okay, how much the population is involved with this digital currency.
That's interesting. I mean, there has been, even on the level of like a Michael Saylor, they've been using digital currency and kind of selling it with a for tax advantages and rebuying it at different values.
Mhm.
And I think, and those are all things where I feel like the government will come back at you. Like this is nothing that they will just pass on.
Yeah, like they're going to get involved one way or another. There's not going to be too much longer. They're just going to kind of let all these transactions kind of go and go from there. So yeah, it's something to be monitored going forward.
So if you have clients that maybe trade with digital currencies or hold them or have those digital assets, how do you try to guide them? Because I do feel like the government, in whichever respect, will, even from a tax perspective, and I'm not sure what the US law allows, but in Germany sometimes they can go even a couple of years backwards, where they affect you and you're like, you did this, and at that time it might have been legal, but now we require you to come up with the tax payments regardless.
Yeah, so the U.S. I mean they tax gains on digital currency sales similar to stocks and bonds. At this point, you buy it for this much and you sold it for that much. That's your gain or loss, depending on, of course, short term versus long term holds from there. So it's pretty similar to the stock market. From there, the main thing is more so it's so new, especially for a lot of these companies. They don't really have strong reporting features, and sometimes they're not even reporting to the government themselves. So it's really more just guiding our clients to just, hey, just kind of track how much you paid for, and then anything that you sold, just kind of just track the sales price from there, and that would be the piece that we're kind of will focus on reporting at that point. So the main thing is just ensuring that it's got documentation in place to support their gains and losses from their digital currency.
Makes sense. So kind of shifting gears, I know you're very big in supporting community, sharing what you know. What is something that's very close to your heart right now, where you feel like you're making an impact in your community?
I'm part of multiple non-for-profits. Part of one called B Force Accelerator. I'm a specialty consultant for them. Whenever they help small businesses kind of get qualified for additional funding or just get their businesses cleaned up a certain way. So I kind of help with the 5-year projections, just assessing the financial stability of the companies that they're running. I'm also part of the board for a local group here called Young Investors Group. So basically the aspect of just passing down that knowledge and educating a younger generation so that by the time they get to college and whatnot, like they already have those tools in place to know how to invest in deals that work for them from that standpoint there. So those are two of the things, just being able to support more small businesses and then educate the youth on financial literacy and running numbers and all that stuff as well.
Yeah, nice. And one of my favorite questions is, what do you consider a life well lived?
I think the aspect of just having choices, where man, I always get mixed up with those type of questions because it's the aspect of, hey, I can get up, I can do this or do that. Like I have the freedom to do whatever I want, as long as I'm not hurting anybody. And then the aspect of like how am I like helping support and build. So always constantly like fulfilling myself by being able to help others along the way as well. So kind of the aspect of tides rise all ships, paraphrasing that saying from there. So that'll be a life well lived for me, of that I have the choice of working, not working, and but also being able to pour into others and help them get to their goals as well.
Nice. Well, thank you so much, Larry. Where can people connect with you, find you?
Yes, I appreciate it. I'm on LinkedIn, I'm on Facebook, I'm on Instagram. It's really just Larry Pendleton CPA. It's all keep it simple from there. There will be a link in all that pages to take you to my landing page where people can book a meeting or just kind of listen to other podcasts and stuff that I've been on, and other investor communities that I'm associated with, so they can learn more about me. And looking forward to connecting with whoever reaches out.
Thank you for joining us at The Path to Wealth. We hope you enjoyed today's episode. Check out our upcoming guests and be sure to share it with all your friends and family that want to take their life to the next level of wealth.